Welcome to Buy, Hold, Sell. I'm Ross Greenwood, and today we've reversed the roles. Normally, Matthew Kidman would be putting me under pressure. Today, it's me putting him under a little pressure. He, of course, is a funds manager, also columnist with Fairfax newspapers.
Right, so the way I see it is you want leverage into an economy that will pick up somewhere down the track. So you need the areas that give you that. First one I'd like to say, I'll start at the small end. You want to be exposed to property, which has been beaten up over the last 5 years. The one that I like is Sunland up in southeast Queensland. Horrible area. You don't want to go there.
No.
It's right on its
terrible.
knees. Sunland trades at about
Property values have fallen.
It's horrible. You don't, as I said, it's a headache. You don't want to go there. Sunland trades about half asset backing. Even if they have to write down the assets a bit more, there's a lot of room to move. They're buying back stock. They've got a big franking credit balance. When the market does pick up, which I think will be 2014, they will be in a good position. I like Sunland. Second one I like, let's go to the resources sector. Beaten up stocks again. It's been a horrible period since April 2011 for all the miners. China's slowed down. No one knew where it was going to stop. Is China going to crash? Hard, soft landing. Are we going to grow at 6%? Doesn't sound too hard to me. 8%, soft landing. It looks like that's come to an end at the back end of 2012. So you want to be leveraged in. I'm not going to go with the really leveraged plays, but I think one area which is really good is Rio, low-cost producer, mainly of iron ore. I think it's got a lot of upside. I think you can get another 20% out of Rio for the big one. Next stock, you want to go into another area that's leveraged to a rising share market, and that area is financial services. Now, you can go with the banks, but I think you get more bang for your buck in the smaller, less banking-focused stocks. So one I like is Henderson, UK-based, used to be part of AMP, started to rally. I think you could easily have a 30 or 40% gain there, but you want to be in those areas that benefit from a higher share market. Next stock I like is you want to get into building materials. So there's a whole bunch of companies, some of them already run the back end.
Building materials generally pretty quiet, aren't they?
Well, yes, they've been quiet for years because we've had a housing malaise, but they've taken a lot of capacity out in Australia. Boral's closed down a lot of stuff. CSR's turned itself around. It's got its cost and structure in order. But the one I kind of like is Brickworks. Brickworks, obviously a very pure play. It has a lot of upside leverage. The brick capacity in Australia is all of a sudden in line with supply. Hasn't been that way for 20 years. Any uptick in housing, any demand for bricks, all in price. We're going to get margin expansion, and then you've got a corporate play with Soul Patts there. So I think that's a really good one. The other thing is you want to be leveraged into an uptick in the economy sometime in 2013. Transport's a great one. We know that. Yep. Transport measures the activity around the place. They haul the boxes around. The one I like is a bit of a turnaround play in itself is K&S Corp. They've got a new manager. The cost base is good. It can grow into new areas. It's leveraged to a housing upturn. It's got all the bells and whistles for something a bit better to happen. It's already turned in the back half of 2012, but I think you've got another 30 or 40% if the economy picks up. So I like K&S Corp.